Hello guys, Christian Evans from Sanktuary here. Welcome to our daily dose. Today is the 27th of September 2016. What the opportunity we're going to look at today is in gold. So for those of you who are using TradingView, it's not quite a weird kind of name for it. XAU USD. Okay, so basically what we were looking at before, myself and my team were looking at this continuation pattern seen in the spot rate for gold. So you can kind of see here, got this pennant style formation here. So the market's pushed up very, very aggressively. This is on a 15, but it looks far better on the higher time frames. Okay, that's a bit too far out there. But as you can see, we're in quite a distinct bullish trend here already. And go on the hourly, there it looks a bit better. You can see this move to the upside is quite aggressive, it's almost vertical, and we've got this period of consolidation here. So we're able to draw these two converging lines for support and resistance, and that gives us our pennant there. Now, as with pennants, they tend to complete around 2/3 to the apex, so to speak, or 3/4 of the way along, and the length of the pole is projected upwards. So had this pattern kind of completed, we would probably be looking, let's see here, we got 1307, 34. Okay, we'd probably be looking somewhere up by here around 1370. That would have been maybe a bit lower, kind of just to ensure that we do say the 1365 region there. We'd be looking for that the aggression to the upside. We'd be looking to kind of get out there, and that would have kind of coincided with this higher region here of resistance. Now you can see there that would have been quite perfectly lined up, and you also had this level here that we would have had to have kind of surpassed also, so we kind of could have had two targets. I guess it kind of depends on whether you look at the aggressive move to the upside being from the top or bottom of this region here, so from 1317, or whether you were looking from the bottom, which is 1307. So that's going to obviously give 10 pip difference, which is approximate this distance here. Anyway, that pattern didn't complete as planned, so we can kind of see here about halfway along, tends to be between 2/3 to 3/4 more so that these sort of patterns kind of complete. But as you can see here, we've got to move to the downside. So for a break of this support line, didn't even have a retest. We might have a retest come in due course, but the market's just pushed straight through here down. Now for ourselves personally, we would not be looking to get in long now until we get to around about let's have a look here. Kind of bit of period there, we got some support there. It's really going to be quite choppy and we've got to play it close to our chest really in terms of the wide range of levels there. We've got a couple of close-knit levels, as we've already highlighted. You can kind of see there's a little bit of support along here. It transfers across this bottom here, spike down, this little level of resistance, which now turns support. So we've got to kind of see how the market reacts around these levels. But the main reason as to why this happened, okay, technically the pattern failed, so there was not enough movement to the upside. Fundamentally, it's based on the Trump and Clinton kind of debate last night there. It was kind of reliant on what the actual outcomes of that debate was, and it did show, based on the polls from the US, that Clinton did take the lead. So the market took this gold per se negatively and sold off, then moving to other assets. Gold, of course, is used commonly as a hedge against inflation and is one of those safety assets, just like bonds. So the fact that people are leaving this gold here now will also be explained in our following discussion now coming on. But the market's sold off here, so it's moving from these low risk assets. I was almost going to say risk free then, but those low risk assets are moving to more risky assets in return for potentially higher rewards. Now, secondly, what I want to look at is again our DAX, so see how that's performing today. We can see that we've had another sharp sell off today. The important thing I wanted to note to you, based on this hourly chart that we can get rid of this Fibonacci kind of killing it here, but we've had that sell off in gold, which has happened over the last 2 hours since about 1 o'clock this afternoon. but then since the open, we've had an aggressive buy up in the equity indexes here. So you can kind of see here that the shift in gold has therefore, resulted in people switching and buying the indices there, the German and of course by default the other indices as well. So the FTSE and the US 30 and S&P 500. So I kind of pointed this out previously. We kind of got this level of support, as we've always said. It's a support region. The market is quite bullish, as we've seen in other videos. Kind of got this sloping element by here. I haven't drawn an upward level because it's kind of it's very, very faint. It's got a very, very slight negative gradient on it. So it's just trying to look at opportunities where we can go long. And the move to the downside, I drew a Fibonacci when it started to halt. It's not so clear based on the staggering nature of these candles now, but it actually worked out that the 138 Fibonacci extension was going to be in the region of these black lines here, so that would have been a good buy opportunity. The market came within about 5 or 6 pips of that, maybe 10 pips, 5-10 pips of that level, and has pushed significantly higher. So it's kind of that remaining lesson there. Do not focus on individual points. Kind of give a little bit of tolerance there. But if you see a market selling off, try and give it more tolerance to go further than kind of getting prematurely. And that's what we did. So we kind of we're a bit late going in on the long. We did make money. I think we were in quite late. We didn't get in till well over the 10,300. And as you can see here, the market's pushing higher. It's had 2 days now of quite aggressive selling off. You kind of look for some buy-in to come in, especially with this support level. So that's basically the end of this video today. It's kind of quite short. We have got a kind of a incentive program for any new clients, as well as I've spoken before. Any new clients or existing clients who are going to top up or open an account with us today are going to benefit from a cross pen set, which is worth 75 quid. So it's one of those little gifts that we like to give to anyone inquiring. So please do have a quick look at our website at www.sanctuary.co.uk. Whoops, running low on the old battery there. And also have a look at our blog post as well. I've posted a new blog post that will be released on the major mistakes made by retail investors and how you can avoid them and actually profit. There's so many articles out there that are basing on how to become a profitable trader, how to be part of the 5%. They're all about trading, because that seems to be the where the growth is in the finance industry at the moment, is in these brokerages attracting the everyday guy, so to speak, and so the dream. But have a look, because I've got a couple of the difference between trade and investment. There is slight differences in how you'd approach the market. So that's the idea of this article. I haven't seen one based on investors, so kind of trying to offer something a bit different there. So please do have a little look.